Good morning, family. Good morning, good morning. All right, if y'all could let me know if you hear me okay, that'd be great. Once I know that, then we can get started. Yep, all right. For sure, for sure. All right, well, I hope you guys have had a good weekend so far. Um, Last week was pretty eventful. It was I heard it was a bit hard for some people, and you could kind of visually see how wicky it was. It was very much small ranges, but kind of sporadic. But nonetheless, after today's call, we're going to have information that will tell us whether we will continue to go higher or if it's trustworthy to anticipate things to end up going lower at the current moment. But yeah, as always, we got to start here. We have these news events. Maybe a decent week next week. We're just going to have to see. There is a bank holiday, which is Thanksgiving. So Thursday, Friday are definitely not days we're going to trade. And possibly even Wednesday may be a little sporadic because the rule is, in terms of participating around heavy news events or in this case holidays, the day before, the day of, and the day after are generally classified as low probability, right? So because at the beginning, right, the first day, like before the holiday, generally they're going to be setting up liquidity pools, really trying to mix sentiment up. Then bank holidays, the day closes entirely, for the most part. So there's really no chance to participate unless you participate before they close the market. And then the day after has to work out the holiday volume. And a lot of people for holidays, as you can imagine, especially if you're rich, go on vacation. They stay out of the market, right? So given the fact that it's also towards the end of the week, right? Towards the end of the week, generally Power 3 is coming to a close. So, I mean, with all those factors considered, the beginning of the week is probably what we will look to find some type of opportunity because there's a holiday, because we're also at the end of the month. Any type of participation will be cut to half risk. And, we're not going to ever overtrade ever, regardless, but especially around conditions that we can reasonably anticipate will be a little more difficult. We got to make sure that our risk management is at the forefront, as it always should be, right? But, conditions like this, times like this, are and around high impact news events, a lot of times that's when people blow their accounts. A lot of times that's when people give back the profits that they made if they had a good month or a good previous week. So it's best to keep this stuff in mind and march forward while avoiding those types of scenarios, right? Because it's just a fact that this is the way it is. So instead of fighting against that, trying to force our will on things, we will act as professionals and do what the professionals do, and lower your risk or just avoid participating for the rest of the week after Tuesday. Right? Doesn't mean you don't look at the market. Doesn't mean you don't sit there and observe what's taking place and get your reps in terms of studying. But in terms of executing, you got to consider the things that I just mentioned, right? Because when to trade, when not to trade is a skill set in itself. And part of that skill set has to do with what we just discussed here. Having situational awareness and how things generally operate within specific circumstances. All right, so Monday we're not going to trade at all. Again, just because we're putting these restrictions on ourselves because of the conditions that are ahead of us, doesn't mean we don't sit and study and observe and still try to find our model and apply our processes. All right, so that is the economic calendar. I wouldn't be surprised if there's a lot of seek and destroy vibes too this week. Just off the heels of what I just mentioned about the current circumstances with the holiday and all that stuff, and the end of the month as well. But yeah, it's pretty much the view on the news. So now let's go to, let me just check stuff real quick. All right, yeah, so let's go now to the bonds. Let me pull up the yields too, just so we have that ready. So yeah, in the chat, can you guys tell me, or I want to kind of test you guys a little bit. So what assets are impacted the most by the bonds, right? And then I'll ask you the same thing about the yields based on what we've talked about the last couple of weeks. So let me know in the chat. What asset or assets are impacted directly by the bond market? Because the yields impact something, or like a couple of different assets, and the bonds impact specific assets as well. So what do the bonds impact? As I get the yields ready. So the bonds impact the indices and the currencies for the most part, and the yields impact the DXY. Okay, so these are the bonds. So the bonds will dictate or influence heavily what the indices are going to do, either confirm or negate whatever the indices could potentially do. One thing also to mention, I've mentioned this before, but I'll just mention it again. If you see that the currencies and the indices and the DXY, or one of those assets, or like all three of the indices are consolidating, or they're not really moving, or things are cracked in correlation, a lot of times that will be a result. If you go and refer to the bonds and yields, a lot of times the consolidation will present itself at a time when the bonds or the yields are consolidating, right? So if the currencies, foreign currencies like GBP, USD, or USD, and the indices, if those are not moving properly and it seems like they're stuck in the mud and they're just not clean, if you go to the bonds and you look at the bonds and see what they're doing, where the bonds are at, and just how these markets are behaving, it gives you pretty strong indication as far as what condition we're currently trading in, and a reasoning behind why the indices are not moving well, or why they're not clean or showing clarity, right? So that helps you rest your mindset and nerves in knowing the fact that, okay, there's something dictating why this condition is not very clean. And then if you add on things like, maybe at the same time there's holidays, maybe there's a high impact news event the next day or that day, those types of things coupled together starts really defining why certain conditions are the way that they are at any given moment. Okay, so just another really, really, really powerful situational awareness tactic that you can employ to give you, or to put you more in the right direction in regards to the question of, should I trade or shouldn't I trade, or why things are doing what they're doing. All right, so for the bonds at the current moment, obviously things have really accelerated to the downside. They've kind of slowed down, right? They've been hitting this fair value gap in here. You could also notice if you take this wick, like I've talked about before, you take this wick and you break that down into quadrants, you could see the midpoint. You could see how sensitive that is and how prices hit that and used it as a rejection level, right? And then also you couple that with this fair value gap and you can start to build, yet again, Why is price stopping there? Well, there is these important levels that have a high influence on price action when price reaches down into them. We have gotten below this weekly fair value gap I've been mentioning. So if we could stay below that, and if we could stay below this monthly volume imbalance, which is right here, I still have a pretty strong argument that price, at least for this market for the time being, should likely continue and potentially take out this low. Right? So we also have this low here for the 10-year future, or the 10-year bond. And this low, so all those lows have been left, right? If you look at all the charts, if I'm highlighting this, and you look at the 10-year and the 5-year in conjunction, you could see that they've left those lows. So it's pretty much in sync with everything. The only one thing I do see that stands out is the fact that there is an SMT here. That may instigate price giving a retracement, but I'm going to be of the opinion, because price is staying below this weekly fair value gap, it's staying below this new week opening gap, recent new week opening gap, staying below this monthly volume imbalance. It's even staying below this large wick midpoint here, right? The equilibrium point kind of closed at that level to end the week last week. So I'm going to see if these things are going to hold, because if you look at that, you can also start to count, right? This is one PD array. The monthly volume imbalance is two PD arrays, higher time frame PD arrays. And then this weekly inversion fair value gap here is also a third. The new week opening gap is a fourth. So if those were to break to the upside, then obviously something near term may change off the heels of the response we've seen from this weekly wick midpoint, right? So that is what would turn my attention to this possibly looking to seek maybe this fair value gap here. But if that stays intact, obviously I'm going to continue to push the issue aiming for the downside. And then that, as a result, should then be showcased in the indices potentially, and maybe make it a little bit more difficult for them to continue their Christmas rally, right? Because that's, during this time of the year, seasonality for the indices is generally bullish, because commerce is constantly, pumping. People are buying a lot of stuff, stimulating the economy. So we'll see if that continues. And we'll kind of see how things move forward with, the bonds here and what we're going to see as price continues. But yeah, again, for the most part, I want to see this continue to hold. If it doesn't, right, our target would then switch. If we're aiming for the upside, first target would be obviously this high here. That's a previous week's high. Then we have another previous week's high, and then other previous week's highs, all the way up into this higher time frame weekly fair value gap. That again would have my attention if we get up above these areas I just mentioned. Otherwise, I'm going to continue to favor that this may continue to drop. This is looking a bit more sloppy than it was, right? So you could see how there's like a little transition happening here going into the new month, right? It's been a little bit more choppy, I guess you could say, in terms of the bonds inside this previous month that we've been trading within, which is about a close in 6 days, right? So we got to keep that in mind as well. But yeah, so I hope that makes sense. If you guys have any questions, as always, let me know in the chat. And if you do get value from this video, definitely share it with your friends. We can get more people in this way of thinking, and get more people over the finish line in terms of profitability, or at least moving towards the right direction. And definitely subscribe if you haven't already. It's greatly appreciated. And Tony and SD and everybody else that does hop on regularly, I appreciate you. Just want to let you know that. But yeah, that's essentially what I see, at least for this 30-year bond, because that's what this is on this left side of the chart. And then, of course, we got the 10 and the 5-year. And so you may be asking, too, if you are new to this type of analysis, why do we have like 3 of them? Why can't we just look at one? Well, like I mentioned, kind of early on, sometimes there's SMT at higher time frame PD arrays that may give us insights if we refer to all 3 of them at the same time. it may give us insights and further clarity as far as what price should do moving forward. So there's this SMT down here. We'll see if that holds. But if we stay below these areas here, it'll probably just be, false, right? And it may just come down and sweep that out. And then the 10-year and the 5-year would probably move a little quicker because this took sell side already. These other two have not, right? There is that overextended factor that we can see here as well. So it wouldn't be unreasonable for them to do what I, mentioned earlier and have them break through this to then possibly seek this area to then continue dropping a little bit later, aiming for these monthly lows. Because this is all bearish here overall, narrative-wise, right? So we're going to continue to press that and monitor our validation principles, which in this case I just showed you guys and continue to show you the 3 PD array, opposing PD array invalidation tactic, right? So yeah, again, I hope that all makes sense, because this stuff is extremely powerful. If you've spent any time watching these weekly reviews I do for the last couple months, you're probably slowly starting to see whoa, there is something dramatic here that is very impactful. So I hope you guys are starting to see how much clarity you can get just from observing the weekly or the higher time frames on a weekend as you go into the new week, utilizing these principles, right, these different tactics. All right, so that's my assumption with the bonds. So let's move on to the yields, see if that shows us the opposing view. And it does, right? You could very clearly see the reverse correlation between the bonds and yields here. And again, the bonds dictate or influence heavily what the currencies like GBP USD, Euro USD, and the indices will do. And the yields dictate a lot of times what the DXY will do, or it influences what the DXY will do. All right, because currencies chase yield, and the currencies impact a lot of different things, like different assets, right? They have a correlation relationship that can be used to amplify clarity and trust in a particular narrative, right? So, because the market's interconnected, everything has an impact on something else, right? That's that principle or idea is called risk on, risk off, which I can make a video about a little bit later if you guys would like. Just let me know. But yeah, so moving from the bonds to the yields, we can see the reverse taking place, right? So this, has a volume imbalance here on this weekly chart. We have this large wick here, similarly to the bonds, right? This has a large down wick. This has a large up wick, and we're resting right above equilibrium of that. And we're also inside of a weekly or a monthly inversion fair value gap as well. And then if we look up here, right, on the weekly, we can also see that there is a fair value gap resting up here. It's barely got tapped into, but that's a little far away. Before it would get there, I would be aiming for the wick here, the midpoint, as I have shown. If we do end up rejecting and going higher, I wouldn't be surprised. We do see that the month has been pretty, it's been favoring buy side, right? So that may continue. And then obviously, again, we have the target here. Before it gets there, though, we have these equal highs here, which is this current month's high. But because it's been going higher, you can see towards the end of the month, if you think of power 3, you can see that the monthly candles, although they rallied up, we're at a moment where it's now coming back into that monthly range, right? So, and then what's below us, if we reject from a high, our eye goes down to, okay, where's a discount, right? At least away from this high if it was to pull back in terms of power 3. Well, you could start to identify volume imbalance. You can identify the wick here, this very large one that should act as a discount array. And then you also can consider the fact that we're inside this monthly fair value gap. So the quadrants of that range can also be utilized as dynamic areas to target, right? If price was to reject and try to seek this overall range equilibrium, right? Which would be from the most recent energetic fractal low to the most recent fractal high. Okay, so our large range here, the equilibrium or a discount, if we're just looking at this weekly time frame, would be down here, right? So if it was to reject all the way down into there, it's not obviously what we would like to see, but based on this time frame, we can see that that is a large time frame equilibrium. So it could be a possibility if it does choose to reject aggressively off the high here. But then again, if that takes place, we'll then see this give us that run up into here, which would, you know, if the yields confirm that, right, if they tank like that, then obviously the conversation that we just had about these areas getting violated and then possibly seeking this weekly fair value gap would start to be a little more clear as far as why we can trust or believe that it's going to get up into that level here on the bonds. And then, you know, couple that with the yields, you know, potentially reaching down there. That's not in the cards just yet. I'd have to see more evidence of that. And then if we were to break down below this candle here, what does this become? This becomes a bearish order block. And then if it gets outside of this monthly fair value gap, we also have that as a level to watch get respected on top of the weekly volume imbalance as well. So that would be 1, 2, 3 levels or PD arrays if price was to break through this. And then we also have the midpoint of this order block here that we could use if it was to find interest to go lower and then maybe target this monthly low and then, you know, maybe this equilibrium. But again, that's not in the cards yet unless it breaks down below this candle's low here, which turns this into a bearish order block and change in the state of delivery from bullish to short-term bearish, right? But yeah, for now, we're going to try to observe this being respected, this volume imbalance, the midpoint of this this large wick here. That should act as a dynamic support level. We have a volume imbalance over here. We could cut through candles, see it as another level of support. So yeah, I do want to see this possibly continue to go higher. Because it's the end of the month though, we may not get anything accelerated to go and take out the monthly high here. It may look to continue to retrace or just consolidate given the holiday coming at the end of the month, and then just the overall fact that it is the end of the month may have an impact on volatility. All right, so you got to keep that in mind. And we're pushing towards the end of the year, right? So, you know, you got to you think about it like this. ICT cuts off his active trading in November. What you may ask, why is he doing that? There's days to trade. Why is he not trading? He should be trying to trade, right? Like, you want to make money, right? Well, the reason he doesn't do or doesn't participate for the most part towards the end of the year is because of the holidays. And if you were rich and a billionaire, do you really think that you would be sitting there taking time away from your family when the holidays come around, when you've already become rich? Wouldn't you just prefer to enjoy your time and then just go and then come back like in the start of next year, towards the end of January? Right? So you got to think, these people that are whales are human, you know, and that human aspect does impact things. And that's why holidays, you know, have low volume, especially with the fact that they cut the trading day short. Right? So these are just some important little nuances that a lot of people avoid thinking about, or it doesn't even cross their mind because they're so laser focused on how do I get an entry that's profitable, when that's like the least of your worries. It should be the least of your worries. You know, but as you grow into being the trader that you're trying to become, you start to pay attention to these other little minute details that do have a pretty solidified impact when it comes to the conditions and gaining clarity in terms of navigation. Right? So yeah, just some things to think about, right? But before I move forward, does all this stuff make sense so far in terms of what we're anticipating for the bonds, what we're potentially going to watch for in the yields, and the relationships that the bonds and yields have with the other assets? Does all that stuff make sense? Just let me know in the chat real quick, and then we'll move on to the we'll move on to the DXY and then the currencies. Yep. All right, for sure. So moving on to the DXY here. So if you go back and look at the video that I did last week, you can see how we were down here. I had this, I had this little magnet here saying that, oh, there's this fair value gap. It's highly likely to want to continue to reach up there. I don't see any reason why it wouldn't. And you can see how that delivered beautifully. It did exactly what we wanted, right? So now that we're here, I would not be surprised given the fact that the month has been extremely bullish in the DXY. I wouldn't be surprised if they do try to come off the high, pull back into the monthly range that has been presented. And then where could we possibly reach down to? At least from this time frame, we have a fair value gap in here, right? We'll see what takes place, right? We're still hovering next to this monthly fair value gap below as well. Well, the whole fair value gap range is here, but we kind of reached into part that was left open. If we go to the weekly chart, we can also see how it's set equal highs here, so that's kind of interesting. It did pierce it a little bit. I personally don't think that's enough to make us feel like, oh, it's not gonna even try again. I think it will probably try again. We'll see. But I wouldn't be surprised if we do turn into some type of retracement here and start to see price maybe try to scoop up or reposition for another leg higher, because this is insane, right? This is a very, very strong move, one-sided. So when you see things like this, you also have to kick your mind into the thought process of, okay, if we're really bullish, we've taken out buy-side liquidity and we've hit a higher time frame PD array, we've been one-sided, wouldn't it be reasonable to start thinking, okay, big money that made money here would take profit above the highs here, because that's where the opposing liquidity is at, right? So they can run up there, trigger them in to the buy side, and then trap them in, because people have trades up here to continue going higher. Well, once they trigger them in, pulling back would scare the crap out of them, right? So when higher time frame levels like this get taken out, you should anticipate that it's probably more likely that they're going to try to retrace in some capacity before they go higher, right? I mean, it's just, hopefully that logic just makes sense given the concepts that we employ and the things that you guys are learning, right? So we've hit this higher time frame level. We have set equal highs here, which in my opinion will probably get attacked at some point in the future. But then again, we've already fulfilled our level that we looked for last week. So we're also towards the end of the week, or towards the end of the month, and we've been really one-sided. So I wouldn't be surprised if they pull back. If they do pull back in a strong capacity to maybe aim for this weekly point of interest here, that drop will instigate interest in the indices going higher. It'll promote them going higher as well. And that'll push us into the conversation we're going to have about the indices at the current moment as well. You do notice that the DXY is pumping higher, and then also the indices are pumping higher. So there isn't much of a symmetrical aspect intact right now in terms of the DXY doing one thing and the indices doing the opposing thing. That could be, in part because of the holidays and everything is being massively pumped. Also the elections that we just came off of, which is a positive thing for the U.S. economy and just the U.S. in general. So there's a lot of manipulation taking place, so we got to be aware of that. But again, we've hit this fair value gap, so we'll see what the response is going to be. It's already came off the high a little bit, so we'll see if it wants to try one more time and then try to give us a retracement before we do get some type of meaningful run higher. If we do present ourselves with a fractal high up here, that'd be pretty interesting. Because, when there's a fractal high that forms on the daily or on the weekly or on the monthly time frame, fractal high being, this type of high with a higher high in the middle, lower high to the right, lower high to the left. Or like this one, there's a lower low here. You can't really tell, but it's lower than this one. And then there's a higher low over here, higher low on the right side of this lower low point. That's a fractal low, this is a fractal high. When there's a fractal high that forms like it did here, a good rule of thumb in terms of situational awareness and narrative mapping has to do with the next 2 days or 1 or 2 days off that high that's a fractal can generally reach down or instigate a retracement. You could see that logic playing well here, right? You could see it playing well over here. Sometimes it will fail, right? But that's the thing. That's why nothing is a be-all, end-all. You know what I mean? But it's something that happens more often than it doesn't. Like in this chart, if you go and study what I just mentioned, at all fractal highs and all fractal lows, the next 1 or 2 days after will go the opposite direction to maybe set up a retracement to then continue back in its intended direction. All right, got a question. Does the order block above the fair value gap also attract price a bit? Or is this FVG strong enough to push it back down? So we're not going to know if it's going to be strong enough, or, you know, we don't know if the response is going to for sure push away from it. I mean, we can couple in the factors that it's the end of the month, you know, and we've already hit a higher time frame PD array. It, in my opinion, we'll most likely want to dig lower to reposition to then push higher, given the fact that, you know, those things are in play and we're where we're at in terms of time. But then again, at any moment we could be incorrect, right? And it could just continue to rage higher because things at this moment, this current time, things are being heavily manipulated for many, many factors. So, you know, just some things to consider. But yeah, if there is a order block next to a fair value gap, obviously that is the highest level of, you know, order block, right? Highest effectiveness with the order block is when a fair value gap's next to it. I mean, we can make that argument here that there's this fair value gap here as well, right? This fair value gap coupled with an order block. So it may look to come off the high here. It's set equal highs up here as well, like I mentioned. So that's going to probably be a magnet if price can get up. You know, maybe it retraces here, wicks down into this fair value gap to start the week. And if it continues bullish, there's our bullish power 3 dynamic framed off of this higher time frame. And then obviously that context dragged to the lower time frame helps you have very strong clarity in terms of moving forward throughout a weekly range, right? So I wouldn't be surprised if they do wick down. We did map out or identify that higher time frame fair value gap below price, like I mentioned. But again, we also have this we have to break through, right? And this may hold price and refuse to allow a deeper retracement, especially if we see the yields continue to run higher, right? That'll drag the DXY off of this order block and this fair value gap, kind of solidifying the response. If it responds from here, and then we also see the yields running higher at that same moment, maybe on a Tuesday or Wednesday, then obviously you can start to really see how powerful this layering effect can be in terms of identifying narrative and gaining clarity with a particular direction or response off of a PD array, right? This is a very, very, very strong, effective way to start building trust in a particular move or direction that you're trying to assume. Does all that stuff make sense? I hope I answered your question. So if it was to reach down below this fair value gap or below this order block here, mind you, think about our 3 PD array rule, right? So there's a fair value gap here. Let's try to paint the picture as far as, okay, is price, like what would price have to do to allow me to trust that it's going to reach down to that weekly fair value gap down here, right? What can I observe in price on that daily chart that would help me justify this fair value gap being attacked and be able to trust it? What can I do? What can I look at in terms of our validation and invalidation process? Well, if you take this information and all the stuff that we've talked about up here, and then you identify this fair value gap in here, if price is to reach down into the weekly fair value gap that's below here, right? In order for us to really trust that it's going to turn in any type of significant capacity, maybe it reaches down to fill in the whole fair value gap, right? Maybe it wants to do that. What would justify that thought process given the fact that we're bullish and we don't want to favor counter trend unless there's a reason. What would give us a reason to look down there and trust it? Well, we have the fair value gap here. That's one, right? Remember, if we're going to go in the opposing direction, if price is one-sided like this, in order for us to trust the opposing direction, it has to break 3 PD arrays, reverse to this overall bullish trend. So in order for us to justify that thought process and switch near term from bullish to bearish, it has to break this order block. It has to violate and close below the midpoint, and then breaking down below this fractal low. That's 1, 2, 3 PD arrays. So if it breaks that, then obviously buy side targeting is put on the sidelines for a little bit, especially because we came off this high. So that breaking that would show strong justification that this was a seriously strong PD array, and it may look to fill in or reach down for this complete weekly fair value gap fill before it continues going higher, right? And then obviously if it slid all the way through these levels, then obviously we would not have any interest in buy side delivery in any like long-term capacity, long-term being like 2-3 months. Because a lot of times bias or overall narrative can last for a couple weeks, right? Sometimes a couple months, right? Sometimes you can get in line with what the overall quarterly narrative is, and then that brings you down to the monthly narrative, and then the weekly, and then the daily, and you can have this massive layering effect that can get you seriously locked in and on side more often than you're not, right? So I hope that stuff makes sense. But yeah, in order for us to justify that this is not going to continue to go higher, and we could start looking for short positions in a more strong capacity, aiming for this weekly fair value gap down here I just mentioned, it would have to violate 3 PD arrays to the downside. In this case, it'd be the fair value gap, be this order block zone, right, or levels, and then obviously breaking down below this, because then this would act as a potential YouTube model short narrative, right? This could be a run on stops, reaction from a higher time frame PD array. Breaking down below this low is our 3 PD arrays getting violated, so buys would not be considered. Breaking down below this low also instigates that this may have an argument to be a YouTube model on this higher time frame chart. And if you can identify the YouTube model or any other trading model that we use generally for entry on that lower time frame, if you can identify those rules in place on the higher time frame, that's another layer to you building justification for a particular narrative, right? And drawn liquidity or whatever you want to call it, right? So you can see bias gets real deep, and that's why one video doesn't really justify it. And being able to hop on calls like this where someone does it live over and over and over again, or makes multiple things or multiple videos related to this topic, it's so valuable, it's so needed. And that's why I try to do this every week with you guys, because those that pay attention to this type of stuff and like go in and study the stuff that we talk about, the ICT talks about, and all the other veteran ICT traders that know how to do bias, like you see the value over time, and there's a process to it. And sometimes things change a little bit, right? Or they look a little bit different. And experience, or being able to ride the coattail of someone that has experience doing this stuff that proves that they can do it, it's so valuable. And it could revolutionize your trading. And then obviously the entry and risk and all that other stuff has, very personal effects to it. But even those things, you get someone's advice that knows what the hell they're doing, you'll be able to really find your way in a lot shorter amount of time. Still going to take time, right? It's not like 1 year, 2 years is going to make you a freaking master George Soros style trader, but you'll get there, and you guys continuously hopping on these types of calls, seeing this type of stuff exposed to you is very, very powerful. It's not the only thing, but it is one of the big things, this process that I try to show, and it proves itself on a weekly, on a daily, even on an hourly basis. So that is my view on the DXY. I hope everything so far has been clear. And again, I can't stress enough how important this stuff is that we talk about, right? All these different elements that we discuss, aside from fundamentals and the other aspects that we can layer on things. This navigation tactic here, the way that we are operating every week, every day, every month, every quarter, it's unrivaled. It really is. And once you're able to get comfortable with this higher time frame and where it's going to go, I mean, it's beyond belief. It really is. It's amazing. And ICT says, right, just before we move on to the indices or the other currencies, ICT says and has said on multiple occasions, where do I spend the most time, right, as an ICT, right? Where does he spend the most time? He gets asked that question all the time. Is it lower time frame? What's more important? He said that the most important aspect of his analysis is spending the most time on the higher time frame. Because once you're able to get in line and you have a process with how to get in line with that higher time frame direction, lower time frame becomes easier to trust, because then you'll know, are we in a retracement or are we in an expansion, right? Are we hitting a level that's going to respond opposed to what this higher time frame is showing when we go to the lower time frame, or not? Or is it going to continue because maybe there's a higher time frame PD array price is punching into that will push price higher? Right? So navigating this higher time frame, I can't stress enough, is one of the most important things right next to risk management, right, when it comes to identifying bias and gaining actual clarity that you can trust. And it's a layering effect. There's multiple things that you have to consider and continue to monitor. But nonetheless, you can do it, and it's not rocket science. It just takes a little bit of practice, and you guys showing up here shows that eventually you're going to really be able to knock it out the park. But yeah, so moving along, if you guys have questions, as always, let me know. But let's move along to the currencies now. Okay, so we can see how Euro has hit a monthly fair value gap. Let's move up and go look at those levels real fast. All right. So we can see how there is an SMT here. I mean, we're looking at the quarterly chart now. That's what this chart is, a 3-month. There was a large SMT here on a quarterly basis, and you could see how the response really aggressively dug lower. If we go to the monthly time frame, we can see how there's also bullish SMT here. Right, there's lower lows hitting at a fair value gap on this monthly time frame. This one definitely smashed through some levels as well. If we now take it to the monthly time frame or the weekly time frame, right, we could see the rejection off of this, right? Run on stops, shift in market structure, right? If you're trading the YouTube model on this weekly time frame, you wouldn't have had an opportunity unless you used this inversion fair value gap. But nonetheless, this perspective, working on identifying the model that you use for entry, identifying that on the higher time frame, that can also be very effective with building clarity in terms of narrative, on this higher time frame. It's not only useful on the lower time frame, the entry models, they're also useful in validating or helping you validate a particular higher time frame narrative, which, like I discussed earlier, it's very, very impactful when you move down and navigate those lower time frames, right? So looking at this weekly time frame, right, we can see how we have a wick midpoint here. Look how precise that was, right? That's what it targeted, and now we came off of that. We can also see this level here. If you were to break this monthly fair value gap into quadrants, you could see that also hit a quarterly level within the monthly fair value gap, right? So it hit a quarter point in this monthly fair value gap range. I do see that there is a swing low here that may look to be violated, right? Because we have fulfilled this and took a higher time frame level, multiple levels, we are seeing this rejection back into the range a little bit. We're outside of the monthly fair value gap high as well. So it may use this as a reason to yank price higher, we do have a volume imbalance here that it may reach for this next coming week. We do also have a fair value gap up here. All right, we have a weekly fair value gap up here as well. So also you want to consider that we also have this weekly high here too, right? So that can also be a target if price was to really respond away from this back into this range that was created. And if that is the case, right, we would like to see the yields go lower, and we would like to see the bonds go higher, because remember, the yields dictate or influence the DXY, and the bonds dictate where the currencies and the indices will go. So if we want to see reasons to further trust this retracing, right, off this monthly fair value gap in any capacity, or trustworthy capacity, we want to see the bonds also kind of support that. If it doesn't support that, and the bonds stay below these levels I mentioned earlier and continue to press lower, then we'll probably see this not even attempt to get back up into this fair value gap, and it may stay weak and maybe try to fill in the rest of this monthly fair value gap. But before it fills that in, we have this low here. We also have the wick, this large wick. Break that down to quadrants too. You can have another target. You can have multiple targets at each quadrant level before it gets to the full low or the full monthly fair value gap fill. All right, but again, I wouldn't be surprised if this does retrace back, but I'd like to see things provide evidence in the bonds and yields. And I'd also like to see, if that's the case with the currencies going higher, I'd like to also see this potentially start to be weak from this monthly fair value gap, right? Because again, these are correlated, right? Reverse correlated, right? So yeah, I hope that makes sense too. Make sure I didn't miss anything. So yeah, I hope that made sense. Let me know in the chat if you have any questions. But now we are moving on to the indices. All right, so if we go to the weekly time frame here, we can see how, if we look at the highs here, so there's no SMT at the highs. We can see how price is pretty much retraced, and then it obviously came off of that retracement and has kind of started to run a bit higher, or at least attempt to go higher. We have taken out significant buy-side liquidity, created all-time highs. So things look like they will probably continue to rage on higher. If that is the case, again, in order for us to continue to trust that, we're going to be needing to see the bonds gain some strength, and then the yields start to tank a little bit. So I hope that you can start to see how connected this stuff is, right? I mean, that's the whole reason or purpose behind these calls, is to try to get you super solidified with how everything operates, right? And how certain things impact one another, how you can trust particular levels and particular, targets to be met from this higher time frame based on this intermarket relationship, the intermarket relationship dynamics, and how, different things relate to one another, different scenarios, right? Like we talked about earlier, the conditional awareness with the holidays and stuff and how things operate around those times. All this stuff is very important. And at first with new traders, it becomes overwhelming, obviously, because we want to know everything. But trying to know everything in something as technical as this is like trying to be a doctor just because you read a book and you want to become a millionaire doctor in like 2 months, a month, or a year. It's ridiculous. It really is. But I hope you guys are slowly starting to see the impacts from the things that we talk about here on a weekly basis. It's very, very, very surprising when it hits you, because you start to build trust, and in a probabilistic environment based on all probabilities, building trust is one of the most important assets, because 99% of people don't have trust. They're just guessing, right? They think it's going to go somewhere. Well, guess what? The stuff that we do allows us to almost 100% know, not 100% obviously, because anything can happen, but we have a very high likelihood that certain things will take place based on the stuff that we operate within, you know? So yeah, it's amazing. And most people aren't digging into things like this. You know, they don't understand it like this. You know, so you know, it is what it is. Right? You guys are here in the right place. I'll tell you that. But yeah, so again, with everything that we've just discussed, right? If we take a look at this, it has retraced into this order block, and we see a response coming off this order block here on this weekly time frame. So we see that the Dow obviously had a very strong response to the buy side. So we'll see if that continues. Again, if it is going to continue for us to really deepen our trust, we're not picking tops, so we're not going to assume just because the bonds are dropping that this is going to all of a sudden turn around. But if the bonds are dropping at a time when this does aggressively shift lower, there's your confirmation that, okay, we're definitely not going to favor buys more than sells. At this point, we're going to transition because something has changed, right? So that's, you know, that's a way to identify if something's changed or not as well. And then obviously you add on the validation invalidation tactic that I've continued to share with you guys, even shared today. And you couple these things together and you start to have a really, really strong navigation skill set over time. And it becomes quite amazing, let me tell you. So yeah, we'll see if it wants to blow out this high. If it doesn't, if it does look to shift and breaks down below this low, that will be my trigger point to start to not favor buys at all. It would basically transition us. If this low is violated, that becomes our last line in the sand to trust buys. Right? So if it like maybe it opens up and starts to consolidate, but then rejects aggressively and can't stay above this fair value gap, can't stay above this volume imbalance, starts having trouble, and then the bonds are falling as well. If the bonds are falling and we break this low here, that's again, it's telling you a story because that's how important these relationships are that we've continuously discussed. But we'll see if that takes place. It seems kind of interesting here because it looks like we may be setting up, like say that does take place, right? If that takes place and we also see the Dow run up above these all-time highs, take that while these leave a lower high, that becomes SMT on top of all the other things we just discussed that may favor price going to the downside potentially, especially if the bonds are going lower as well. Right? So you could start to see how things start to layer, and you can start to trust things, right? So we'll see if it can get above this fair value gap, right? We're going to observe that. If it is going to go higher, we want to see this respected, right? We don't want to see it break down below that. We don't want to see this low violated because going back to what I was saying about the 3 PD array rule, which I mentioned earlier and always mention as a validation tactic, you could see this fair value gap. Let me go to the daily chart. You could see the fair value gap in here. You could see the swing low in here. And then again, if it was to stay below this and violate this low, there's our 3 PD arrays showcasing the change in the overall state of delivery, right? Now, if price was to violate this, right, that's just even further context that, okay, we've definitely changed, probably long term. And then it'll probably look to maybe even target this because this is the most clear imbalance that I can see if this low was to be violated. But obviously before that, we'd have these lows, trend line liquidity, then we'd have these lows as well, and then we would have this as a potential target. Again, that's way down the line. That only becomes a consideration if this low is violated, right? Especially if this low is violated. If this is taken, then we're obviously reaching for here. And then obviously we wouldn't be interested in any type of buys unless something aggressive like this was to kick back in alignment. But again, for now, right, we're going to take all the stuff that we've discussed from the bonds here, right? We'd like to see this stuff be respected if it is going to continue going lower. If this gets violated, my next targets would be these highs. And then maybe if it's really excited, it'll break through the volume imbalance and get up to this fair value gap. Obviously, again, that is only going to be justified if we could prove that we can get above this fairly easily. Otherwise, I'm going to continue to favor the downside. Same with this, but in the opposing view, I'm going to continue to trust that it's probably going to continue to go higher, assuming that it's going to respect the midpoint of this wick, the monthly fair value gap zone here that's acting as a potential area of support, right? And then obviously this volume imbalance. And then, of course, if this gets violated, the midpoint of this wick, this fair value gap here, and then obviously the volume imbalance breaking down below this becomes a bearish order block in which we can use to then seek this fair value gap down here and the volume imbalance and so on and so forth, right? But that's not in the cards unless something proves itself, right? That what does that prove? Us breaking down below this, because then 3 PD arrays opposed to this bullishness have then been violated, and that justifies our anticipation for price to go lower. So this is going to continue to remain bullish in my eyes until proven otherwise. This is going to remain bearish until proven otherwise. DXY, in my opinion, we want to see price retrace into this area if it is going to go higher. That's also, again, in alignment with this going higher. Right. So, and again, if it breaks down below this low, this becomes a violation of the bullish trend, at least near term. Right. And then we would look to target this weekly fair value gap down here. And then however price wants to respond inside this weekly fair value gap would determine whether we're going to have a long-term sell-off or if it's just going to retrace down below there to get us into a level on this weekly time frame where smart money would then want to try to load up and take out these relative equal highs that were left and maybe blow out the rest of this monthly fair value gap. All right, so I'm going to anticipate that us pulling back into this to then go higher because nothing's changed overall. Okay, so then we move on to the currencies over here. We can see how there's a response from this weekly fair value gap. I wouldn't be surprised if we do retrace to then continue to go lower. We have targets here. We have quadrants of this monthly fair value gap I mentioned, and it wouldn't be unreasonable for them to want to retrace to then try to continue to go lower. Whether it gets up to this fair value gap or not remains to be seen. We have a volume imbalance here it might reach into. If we go to the daily chart, we have an order block here. We have a fair value gap here and a swing high up here. So if it was to violate these areas, this weekly fair value gap, the midpoint of this order block and this fair value gap down in here, that justifies our reasoning to target these highs and then this larger time frame weekly fair value gap as a possible retracement. And then however it responds up there, if it did get up there, would determine whether we're going to continue for any more meaningful run higher. But unless that takes place, I continue to favor the fact that we're going to continue going lower, justified by the bonds, at least for the moment, justified by the bullish yields, and justified by the potential bullish DXY. Okay? And then as far as the indices go, like we talked about, we have 3 PD arrays we're trying to watch. If we go to this daily time frame, we have the fair value gap here. We have the fair value gap here. We also have the low here that got violated. So if we can get back down below this fair value gap and then blow out this low, that's when I can start to trust longer term bearishness. Otherwise, even though there's signals on these other assets showing that this should potentially look to continue going lower, we're in a holiday time. We're off the heels of a very positive news in terms of the election. Things are heavily manipulated right now. Seasonality is heavily bullish for the indices. So it's not unreasonable to see this kind of going against some of the other indications that price could potentially go lower. So until something like this takes place, like this fair value gap breaking and then us violating this low, we'll continue to press on higher because we don't pick tops regardless. I don't care what the market shows you. We don't pick highs and we don't pick lows. All right. So yeah, that is my thought process across all these different assets. This is the process that I pray that I can get you guys to really solidify. Your guys' time here is spent specifically to master this stuff. That's my specific goal when I get on this, these live calls. It's to get you guys to understand these elements, because once you gain this understanding, you then gain clarity. Once you gain clarity, you're one step closer to allowing for profitability and consistency to take place. But it all starts from this higher time frame in terms of clarity. Because if you're on the lower time frame, as you probably have witnessed, you can get dragged around by the hair constantly and feel totally lost. And a good rule of thumb is when in doubt, zoom out, right? So yes, before we go, I just want to make sure that everything we've talked about made sense. I want to make sure that you guys don't have any last minute questions that we can knock out. But otherwise, if you guys have gotten value, definitely like the video, share it with your friends, subscribe if you haven't already. But yeah, if you guys don't have any questions, we'll probably put a ribbon on this. We have covered a lot, as we generally do every week, right? But if you've spent time here watching this process and how we do things, and then going and watching it in your chart take place, you see why this stuff is so important and the value behind it. And Jerica, I appreciate you subscribing. Welcome to the family. But yeah, guys, if you have any questions, like I said, let me know in the next couple seconds. If not, we will bring this call to a close. So yeah, just let me know. All right, guys. Well, I guess we will put a ribbon on this. Thank you guys for your participation today. Thank you for your attention. I appreciate it. Hope you guys got value from today's video. I'm grateful for the time that you guys spend listening to me talk about this stuff. Trading is something that's changed my life and has changed so many other people's lives. And it could very, very well change yours and your family's lives as well. So that pretty much does it for this call. Again, thank you guys for participating today. I greatly appreciate it. And I hope you guys have a wonderful rest of your weekend. If you guys have any questions or any concerns ever, DM me on Instagram at WMG Trading if you haven't already. And yeah, with that being said, you guys, I will catch y'all on the next one. God bless and have a safe rest of your weekend.